Good afternoon. This communication should accompany our most recent risk manager, where we provide you with some slides and commentary on the palm oil and vegetable oil market generally. To begin with our first slide, we're simply looking at the production of palm oil and the seasonal pattern that we get with palm oil production and output from the key exporters, Malaysia and Indonesia. So it's very clear that our peak in production is around September, October, that window. And if we compare the peak this season to the last two seasons, we're better than last year. So it's an improvement from that standpoint. If you compare it to the season before, we're not quite as good. So we're up about 1.5 million tons rather on last season, down about 500,000 or 750,000 tons versus the cumulative production Jan-Sep of the previous season. So that's essentially the production situation as we stand right now. Better than last year, but not as good as we could be or have been. And it's relatively simple when you look at prices later on. We're a fit between those two realities as well. If we explore why output has evolved, and we look at, in this instance, the province of Sabah in Malaysia, one of the key producing regions, the temperatures this year were much more benign in that Jan, Feb, March, April, May, June window, where the crops are and the plantations are gearing themselves up for peak output in September, October. So if they're stressed in that window, typically it leads to lower levels of production, and that was the case last season. This year has been much more benign, and hence why the crops have been able to give us better output this time around compared to last season. So clearly we're looking for how the conditions evolve Jan, Feb, March when we're thinking about the peak of supply for next September, October in 2018. When we think about that window, Jan, Feb, March, and the veg oil and the oilseed complex, we also need to think about, of course, South America. And at this point, it's not so easy to have a very definitive view on the output in Brazil and Argentina from a sunseed and soybean perspective. We can make some hypothesis about the area of plantings and how that's evolving. So in Brazil, they're coming up to halfway planted as we stand now, at 50%, give or take, in the next couple of days. That's above average, so we're planting quicker than average, but we're not as quick as last season, and that's as much as we might say about Brazil at this point. Clearly we're looking at Mother Nature and how she performs over the coming weeks and months prior to the harvest in January, February and March of 2018. So a lot to play for. If we look to Argentina, maybe there's a bit of a story there that in all probability the planted area of soybeans is going to be lower in response to the different tax reforms, or the evolution in tax reform, taxes, export taxes for soybean and corn, and how they favour corn prices at the moment, and that whole dynamic. So, but like I say, it's a little bit early days to call South America one way or the other at this point. And just we're from a weather monitoring perspective, like for Indonesia and Malaysia, we're looking for extreme heat, extremely dry temperatures to cause an issue. That's exactly what we're looking for in Brazil as well, in the same windows, Jan, Feb, March. So as we move on to some of the other parameters in the palm oil market, and we look at stocks are better than last year, so we're holding more inventory now compared to where we were this time last year, but similar story to production. We don't have the same volume of stocks. If you go back 2 seasons ago, we were all asking the question, are we going to go to 3 million tons of stocks in Malaysia, for example, and that was a very bearish looking scenario. This season we're very much in the middle of the two scenarios of the great tightness of last season versus the abundance of the season before. So that's kind of interesting. From an export perspective, this is going to be very important over the next couple of weeks and months, similar to the production for long-term supply. Exports are going to be a dominant force in the spot market in palm oil, I believe. And if we look at the October numbers from some of the sources of exports, we can look forward and probably see that maybe October we're gonna potentially end up with a bigger export number than last month. Now, to put that in context, we should be seeing declining exports with declining production. So if we can get a higher production number than last month, that's very contra-seasonal, and it's positive for demand for palm oil. And if that theme of strong exports persists going forward, we need to realign what we think the stock situation, and we're going to have to price in that at some point. And that export outlook is going to evolve in large part to the relative value of palm oil. If we look at the relative values of palm oil compared in this case to soya oil on slide 9, palm oil is relatively competitive, so it's trying to price in some exports. At some point that dynamic, that market desire at the moment will have to evolve if we end up pulling down our stocks too much. But as it stands right now, we're at a relative price point that's positive for demand for palm oil. From a flat price perspective, looking at spot prices on slide 10, there's a very clear seasonal pattern. We're in a period now where prices tend to gravitate higher in the spot market as well, so that's something to bear in mind with. As we look forward, as consumers may be looking to take some cover, we're looking here at March futures and how they've evolved in other seasons, and typically that March position tends to gravitate very slightly higher on average. Last year we pushed quite a bit higher in response to the disappointing production numbers that we got. So, and then you compare that to the prices for the season before, we were in a much lower price paradigm. So we're right in the middle of that at around that 2,800, something above 2,800 level. It's a nice midpoint between the 3,000 Malaysian ringgits per ton March futures got to at expiration and the 2,500 that the March 16 futures got to. So it's that middle ground again. We're in the middle ground of production, we're in the middle ground of stocks, and we're in the middle ground of prices when you compare the last 3 seasons. Now, that said, what's interesting is that when you look at how prices evolved between now and March, 8 out of the 10 years we've increased prices. 7 out of the 10 years we've increased prices by more than 10%. Now, you need to bear in mind that on slide 14, as we stand now, right now, we're the 3rd highest March futures price of the last 10 seasons. So we're starting at a high base. So that makes it a little bit difficult to envisage an environment where we gravitate too much higher or to the same extent as other seasons. That's 10% is the equivalent of nearly 300 ringgits. So $100 a ton, give or take. So it's difficult to see with the improved production and the higher stocks, but goes back to our export number. That's going to be very important in how that evolves over time, whether we can do that, whether we can really think of challenging those 2011 and 2012 high prices that we saw back then. So with that, there's a lot more we could talk about in relation to palm oil, vegetable oils, generally speaking, but hopefully this is just a very quick update and a few thoughts, a bit of food for thought on the palm oil market. And if you have any questions, please reach out to us, phone or email. Thank you very much.